Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. Oh, the camera's not working. We'll just do that. Okay. And we'll go out and grab our links. Here's the Twitch. Where's Discord? There you are. U.S. Philly Fed non-manufacturing could be released at 8:30 one of these days, where I feel like buying with two hands, but the market is not giving me any. Well, we are a little bit higher, aren't we? Very interesting. Well, isn't that interesting? My data for the ZN is screwed up now. So we're just going to remove that for today. Okay, so we are above the midpoint, and if we just look at the open to 175, so we're really just like right in the battle zone. Okay, and we're pushing below the VWAP. So from a risk perspective, best would be 14.5. Pretty unlikely to get that. We could maybe take something here if we really see the support for it. Oh man, it's just so hard with the deltas and everything being screwed up. I guess I rely on looking at that a lot more than I thought. And what was the yesterday's close? It was around 100. Guess I like that. Well, I kind of do like a short here, but you can't take it at 12. Really, can you? Maybe 12.5, maybe 13, but then at that point it's not really a good short anymore. The problem is you could use the VWAP as your risk, but it's not a very good risk pot because it could go back. It could go on the other side of the VWAP, or it could bounce very easily. Overall, though, I would say people bought this week. I think they're going to have to close and we're going to sell. So that's kind of my take. We tend to do poorly on Fridays, so this is where I'm trying to work out a better way of looking at this. So they're selling it. Yeah. $16 is where we got to overnight. I'd have to say I'd definitely favor the short side. Okay. And that right there was a lure. Nobody went for it. It does appear to be some we're gonna have a hard time getting filled there. Okay, so it looks like today everybody's going on about that Donald Trump is calling for an end to quarterly earnings, which is a very, very interesting discussion. Don't you think? I'm gonna have to think long and hard about that one. So of course I know that CEOs would love to get rid of quarterly earnings so that they don't have to worry about it. And they probably feel like what I'm doing right now isn't reflected in the quarterly earnings, and so I get punished for something that doesn't matter in the long run, and then I'm not able to do that thing that I want to do in the long run because the short-term traders hit me on earnings. That's probably what they're thinking, right? But then what do you replace it with? Because you can't let a company go, like if they go a whole year without reporting things and investors would have no clue what's going on in the company. That's not okay, right? So what do you replace it with? That's the big question. So this is maybe actually not. It's kind of a non-story in that respect, because what are you going to replace it with? But I guess it probably gets, the conversation going. Some guy here in r/politics thinks that this is a reason to sell all of your stocks. It probably means it's not. Okay. Well, it sucks that we didn't click on that faster, but we really need to anticipate that. Oh, in favor of 6-month reporting? Is that what they're saying now? Well, let's pretend that we're short here. Do we take it off? I think no. Somebody's definitely betting on it short. Right there at 11.5. Okay. So if this is still short, they're probably not going to give you a shot at 12.5. If this is long, I suppose you could take one at 12. Although there was this area here. What is it? 200? And we were there yesterday. That's when I left and it went through it. Now that we're back up there, that area is back. Will they go through it again? Basically, that's a support line that has failed once already. And that's kind of interesting. NVIDIA dumped hard. Okay, well, 11. It really looks like it's going to go through to me, but you notice that through all this, the cumulative delta is not really changing. Well, I don't know. Every time that it ticks up, I feel like, you know, it looks like it's a significant pullback, but then it comes back down, you know. And I don't necessarily see I don't know. I mean, the next step down is 100. Okay, so can't really go long here. Well, it's not that you can't really go wrong here, but what we're trying to do is we're trying to use the information that we have to reduce our risk. So if we know that 100 is a particular target, and we're trying to limit our risk to 2 to 3 ticks, does it really make sense to go long here? Not really. You know, and on this side you got 14.5. Seems to be significant. I mean, I really think that I think we're probably going to move down just because there's been so much buying during these sessions, and I think people are going to have to close. I guess maybe we should look at commitment of trader reports. See, they're trying to push through there, and they're just not able to do it at the moment. That's kind of the thing that's giving me pause. Well, I mean, I just don't think I can make a trade in here. But what I see is it should be going down to 100, and they can't seem to get past 11. I think anytime you see something like that, it's not doing what it should do, I think it has to give you pause. So obviously, maybe another 3,000 contracts just come through, and then we actually do touch 10.5 and continue down to 10. You know? It's possible. But what if it doesn't? I mean, that is kind of an odd thing, and it's not doing what it should. You could maybe get a good trade the other way if it doesn't get through here, you know. So I can see, you know, in place people are going to be making trades. I think there's a reason to be going long at 11 for some reason. It just doesn't match our risk profile, does it? Oh, let's see. Good morning, Uzi. I need to do better with looking at the video chat. I was thinking about it the other day, and I was like, we should just be more crazy and just forget being successful traders and just, do what would be popular, and it'd get people excited. But then I realized that I would rather be a successful trader, so I scratched that idea. You get talking too much, it distracts you, and then you miss the trade, right? And that tick up was pretty good. The 23 being bid there and everything. Frankly, if it ticks out of this, and you're using 10.5 is your risk, you could still buy 12. 3 ticks risk. Trading is better. YouTube is silly. I come for the trading and insight, not for the charts. Well, I appreciate that you think that what I say is insightful. So as of late, I feel awfully silly sometimes. Especially after that mistake. I mean, I'm sitting here looking at my trading and I'm like, what? My trading is actually not too bad right now. Like, I can't sit down and say I'm a shitty trader. I'm just not a very successful one right now. You know what I mean? But the thing I was thinking about last night was like, how often is it that it makes a turn or it does something and I'm like completely shocked, And I had no idea it was coming and I just didn't see it, and the action is totally confusing. Now that does happen, and especially when I really think it's going to do something and it doesn't do it. No, Uzi had a rough week, relatively speaking, too. Yeah. But very often, just like right here, I was like, well, I see a case to buy 11, and if you had done so, that would have worked out, right? So it's like, it's always there. It's just that you have to like anticipate it, right? We have to use what we're seeing to reduce our risk, and fits in line with our reading of what is the more likely thing to happen. So from that respect, I can't say that my analysis is bad. But it's like little things, You don't have your risk management, so there's a tick there and a tick there. You're not fast enough, so you don't get in that trade at all. Or you pick a different price, and because you picked a different price, you actually end up getting stopped out of that one, versus you picked a slightly better price and you don't get stopped out of that one. If it means anything at all for myself, I think I get a little complacent with the summer chop. The summer chop was mad easy for me. The increased volatility requires some light adjusting for me. Yeah, that makes sense. Because it's with the chop, it's not going to go very far against you. And you're more likely to get filled on both sides. And for me on the split side, because I tend to do better in the volatility. Now, we've had some volatility, but it's still been slow summer action, hasn't it? It's like it'll just be really slow and boring, and then all of a sudden you'll get a ton of trade that'll take us somewhere, and if you weren't already in it, then you miss it. And that kind of sucks, but it's still slow summer trading. It's not like it's ticking up and down all the time, which is where I would prefer to see it. So I kind of sat back here and said, if I was actually trading my live account, I don't think I would trade during the summer. So I don't necessarily want to get all over myself for not being profitable here in the summer. That 2 days ago, that was like a mistake that I should not have made, and that's why I kicked myself so hard on that one. But happens. Even then, if it was a real account, it wouldn't have been a disaster. It's just a little disappointing on myself, that's all. But then we're coming up into this period, the September, October area, that's when you tend to get some real volatility. So I think that we could have some profitable trading ahead of us. We adapt and overcome, yes. I think there could be some profitable trading ahead of me here, though. I don't think I really want to stick my neck out, though, until next year. I'm going to use this time period to see how well my adjustments actually work in market conditions that I think are a little bit more favorable. And then take it from there. Well, that long at 11 looking awfully nice right now. They're going to have trouble at 13. And like I said, from a risk management perspective, I suppose you could still take 12. Although you really got to remember that this 10 is sitting down here still. And there's this liquidity down here in the 5-year, although there seem to be building up pretty good bids below us. The hardest I've ever had. Oh man. Well, I will say so far. So that was the end of the opening range. So the opening range was 5 ticks. No, it wasn't even 5 ticks. It was a 4-tick opening range. That's really bad. Like when you look up the earlier days in the week, we would have a drive in the first 40 minutes of trading of about 8 to 10 ticks, and it would go to a spot and then it would kind of stay there, and then on one day it reversed and on one day it continued from there. What we had was 4 ticks down and 4 ticks back up within that 40 minutes. So not only did it not move very far, but they actually swung down and up. So that the market is particularly directionless today. I think people are not initiating new trades here, causing a drive of some sort. That's what I think that means. There is like news at the top of the next hour. Consumer sentiment and so forth. Inflation expectations. Those usually aren't like huge moving news though. So, I don't know. I try to stay positive. Like I tell my wife, if I was depositing money into my account whenever I lost, then I'd have a problem and I should probably stop. But I've lost 3 ticks this week. No big deal, we'll get them back. It's harder when you have a wife. Even harder when your wife owns a business and makes most of the money. You know, one of the things from John Grady's No BS Day Trading course that always kind of stood out to me was at the very end of the book. He says, if you really want, you know, to make some big bucks, marry into money. Like, really, think about it. Trading, like what we're doing here, you're only making a few ticks a day. Like, honestly, here in the summer, I've had a hard time even getting 4 ticks. Now, during the regular season, I think I was tending to make 4 to 8 when I made it. So that, even, you know, on one contract is not very much, right? So to make a living just trading is a very different thing, isn't it? I mean, you got to be swinging some serious size to be making $100,000 a month, let's say, right? So it really helps if you have a spouse or someone like that actually makes really, really good money, and that can allow you to do your trading. My wife and I's story is weird, but it helped her build her business. We both collect paychecks from it, and it what's that word? And given as much, she's very supportive. Yeah. Well, and that's really good. So I think one of the things that kills traders. But how does the successful students that he interviewed make it? Well, I think the thing that you got to keep in mind is that a lot of these people that are really successful traders, like say the people that John Grady interviews, is not necessarily their sole source of income. And that's the thing that kills you, right? Is that you look at all of the people that trade or that go into futures trading, right? And we know statistically only 10% of those people actually stick around and become profitable traders at some point, okay? So if we're already looking at just the 10% of people that make it, now let's look at that 10% of people. How much money do those people actually make? And not all of them are making $100,000 a year. In fact, I would probably say that the vast majority of them don't make $100,000 a year. It's that upper echelon of that 10% does a lot better than the rest. So a lot of them are just doing it, you know, they have a regular job, or they have a spouse that makes a lot of money. I think it's 2 things. One, we can control persistence. The other is trickier, capital life. 1 to 6 ZB contracts under trade, depending on my confidence in the trade, right? Yeah. Well, and so that's the thing that I think kills people is, one, you have people that try to go into it too quickly. And of course, there is definitely an incentive and some benefits to just trading right away. But you start trading, you don't know what you're doing, you're going to lose money, right? So most people just burn through their capital before they quote unquote make it. Oh, let's see, Uzi. I almost blew my account a while back trading currencies. I managed to double my account in 3.5 months and gradually increase my size over time. That's good. So yeah, first thing is you have to get to the point where you're actually profitable before you lose your capital. And then the next thing though is then you kind of reach this point in which you realize what is actually reasonable to get out of trading. And for most people, I think it comes down to that it's more work than it's worth. You know what I mean? He has 2 interviews with 2 of his most successful students where they say their trading is their sole source of income. Well, so I think that one guy said he's trading a 10 clip, right? So he's making $150. And I think he was only taking like one ticks at a time too. But if you're making $400 a day, you know, is that really? Yeah, you could live off of it, but you're not making $100,000 a month, right? And that's the problem. Is like for me, you know, I'm a software engineer, so base salary for a software engineer is like 70, and you can get up as high as 120, and then if you get into management, of course, you can make more than that. So that's kind of the range that you're talking about. To make that much from trading, it's hard. I am not a trader, and somehow I still make profits. Maybe too much trading is what sinks most of traders 90%. It could be. I mean, so here's the other thing is I think there's kind of this strange dichotomy. So like you're looking at what kind of strategy works, right? I think that for a beginning trader, you want one that gives you a lot of experience and preserves your capital and is easy. Or not easy, but you know, you can get real winners out of it, right? Well, a lot of people gravitate towards scalping when they start because, you know, you don't need a lot of capital to get started. You get to make a lot of trades, etc. But the problem is that scalping is probably the most competitive, most difficult type of trading to be successful at. You know what I mean? Even if the win rate, you get a good win rate and things like that, when you do all of the math and everything, it's really hard to be successful scalping because they stop you out, man. Every time, especially if you're small. And then you take the split side, swing trading. You know, there's some good trading out there in swing trading for sure. For sure. I remember I would do swing trades, like I would just watch a chart and I would say, okay, I want to buy it down here. I'm going to put my order in to buy, and then my stop is going to be this price. And then I would not watch it during the day, and then I would look at the action that happened, and that's how I would enter my trades for the spreadsheet. Because for me, it was like if I was watching it, and then I was like, oh, I got in, no, I didn't get in, I don't know. And so I tried to be like more controlled about it to try and make those results as realistic as possible, because I didn't have a real simulator. And I did really well. Like that was like right after the market crash, but I was doing that and I doubled the money like 4 times over in 2 years, swing trading. Now, I doubt that I would have had that performance had it been a live account, but I think that just goes to show it's probably easier to be successful swing trading than it is scalping. But then you need more capital, you are taking on more risk, you don't develop as quickly because you're not taking as many trades. You know, there's no perfect strategy. But to the point, I do think that most newbies overtrade. In fact, some reflection on my part, though, this week I made a trade every day, and I think that's what hurt me. I got a little impatient and traded on days where my gut was telling me it was too risky. Right. Well, I had noticed when the places, because I don't know exactly where you took them all, but when you had talked about trading, you know, there was kind of some crazy stuff going on when that happened, wasn't there? You know? To take it back to the ZN. I mean, here was Monday, right? The 13th was Monday, right? Yep. So we had a really crazy day for a Monday. Okay. Tuesday was much more subdued, but we still had a big move. And then Wednesday we really had a big move. And then yesterday we had a big move. You know, this has been going up and down the session every day this week. And yeah, I mean, there's a place to make money in there for sure, but it's interesting action, right? And it's really hard to watch that and say, I'm not going to trade it. I mean, I took a short at 12 half the first time. That would have worked out okay for 3 ticks. And then, but I didn't get it. And then I said here, well, maybe you could go long, but it doesn't fit our risk profile. It's really hard for me to watch all of that and not take a trade. It's really, really hard for me. I think if it wasn't for being able to chat a little bit, would probably I would maybe FOMO into a trade. Yesterday I did the opposite. I bought the bottom of the profile and it broke out. Oh geez. Yeah. What was I gonna say though? Oh yeah, but so to the point about overtrading as well. I really think that people do themselves a disservice by going into oil in the beginning. Like Pete from Jigsaw, he mentions that from time to time. Like he says, well, you need to take an instrument that interests you and fits the way of thinking, you know? And then he also says, well, you kind of want something that moves so that you have opportunities and you can see the signal and you can learn it, right? I totally disagree. Totally disagree. The thing is that the instrument that appeals to you the most, that appeals to your brain and the way that things look and stuff, is often the worst instrument for you to trade. Absolutely. So you get into oil, you're going to see shit all over the place that's not really there, and you're going to take too many trades. And stuff is happening so fast that you don't really know what's going on. Whereas with treasuries, it's so intentional, you know? It's like I can analyze this and I can explain and remember almost every tick and how it happened. And yeah, it's slow, but slow is like what I need. It's not appealing to me. I'm a little ADHD, you know. I would rather have something that moves around all of the time. But having that, actually feeding that part of you, actually turns out to be bad, because then you overtrade. And if you trade ZN, you learn the one thing that is going to be your greatest weakness, so you need to be patient. So yeah, I think that in almost all cases, you're probably better off starting out on treasuries. I think you start out on Treasuries, and then, you know, you get some success under your belt and you understand the market, and then you turn around and then you can turn around and make a decision about what market would actually work best with your strategy. You know, all markets do the same thing. The only difference is liquidity. I mean, from a scalping perspective, they all have their oddities that you're going to notice, right? There are things that the 10-year does that the 30-year doesn't, and vice versa. You know, the thing that always screwed me up in the 30-year is it tries really, really hard to make you think that you're in a 4-tick range. And so you'll try buying the bottom of the 4-tick range, and then you actually end up buying the top of the next 4-tick range lower. versus when it's a ZN, it just sits in a 3-tick range and it doesn't do anything, you know? The problem, it's not a problem with strategy or money, it's just that not everyone can be a trader, just as not everyone can be a professional NBA player. Quite simply, trading is not for everyone. Trading, it's just like chess. There are winners, losers, and victims. Well, yeah. So let's talk about that. Because I think the thing is that obviously we all know that 50% of the lots overall are going to lose, right? And there's always been this question, like you hear it on the futures.io board all the time. If 50% of the traders lose, how come only 10% of traders are actually successful? You know? And I think there's 2 reasons for that people discount. And the first thing is that size matters, right? So the more money that you have to push things in your direction, the better you're going to do, frankly. And that's going to increase the win rate of those people that have the money and decrease the win rate of those people that don't have the money. So that in and of itself is going to mean that really more traders are actually going to lose than others, because the ones that are winning are making a lot more money than the individual people that are losing. It's just like, you know, there's one guy over here that's making, you know, $100,000 compared to 10 other guys over here. They're each losing $10,000 each, right? So that's the first thing. And then the second thing is over time, right? So you might have a successful strategy, but you aren't able to handle your strategy not being successful for 6 months. So then you have to quit. And then so I think that's part of the win rate problem too. So that's why I say, if you really want to be in that 10% of successful traders, the first thing that you're going to need is persistence, because the chances are you're going to fail many, many times before you actually make it. To increase your size, the best is mining. So, you know, I wanted to do an experiment with the mining, because I was like, you know, I know that the Bitcoin market is going to go down. Oh, by the way, we might get a buy here. I'm watching it carefully. I didn't really like it when it was up here, because we were at, where did it stop? 13.5. Oh, sorry, where did it stop? It was 14.5. Okay, so it was kind of like the same thing over here. It was like it was stopping just short of the target, and I didn't like that. And it's really rangy, and I don't like making a trade in that 7:30 hour. Now we're back here. The question is, do they come one tick short, or do they blow through this? But I'm also noticing in the 5-year there was a strong bid at 21 that's gone. And now there's some strong bids below us, so they might actually go through it. So if they go through it, then maybe we could take a short or something like that. I don't know. It still doesn't look like a good trade for me. In fact, given that the opening range was so ridiculously narrow, you know, maybe I just don't take a trade at all. Oh my gosh, that my 10-year chart is so effed up right now. Let's see if I change it to RTH and do that, and that might fix the data. Yeah, there we go. Okay. Anyways, you guys are catching me like being ADHD now because I jumping between different subjects. Oh, so first of all, if you want to be in that 10%, you've got to be persistent. You've got to do it for a really long time, and you've got to be willing to be unsuccessful and learn for a long time. That's just the way it is. And people say, oh well, you just got to stick with it. And I think that people seem to think that sticking with it is like 6 months, and it's not. Like the people that I see that are successful are people that do it for like 10 years or more. And then when it comes to like 10 years or more, there's still a lot of those people that aren't successful too. And so you've got to be doing the right things as well. And that's where I would say that my observation so far, being somebody that had a period of about 4 to 5 months where I was successful, and a period before that where I don't really feel like I knew what I was doing, and then a period of about 6 months where I've just been awful. The thing that I've noticed is that it's little things. It's like you'll have a strategy, and it's actually a good strategy, but it's just those teeny tiny little things. Yeah, the first thing everybody needs to do is stop listening to the retail trading education is all junk. I don't know if it's junk. I just think that it doesn't get you all the way there. You know? I think the Axia, granted I've never taken Axia, but just based on what I see in their videos and stuff, I feel like Axia is a bunch of stuff that you would learn on your own anyways. You know what I mean? So certainly it helps, and it would speed things up, but I don't think that Axia is going to make you a successful trader, right? No BS day trading is, oh my gosh, unbelievably useful for understanding the microstructure of markets and how they work. I don't think that I would understand what was going on as well as I do, and not that I completely understand it, but I think I have a pretty good understanding of why price is moving up or down based on the information that I have here, right? But that doesn't necessarily make you a successful trader, right? Because it's the teeny tiny little things, and it's like those tiny little things might be really hard to find or know where you're doing it wrong, you know? So one of the little things that I think people get wrong or screw up on the most as a beginner is that the only thing that you really have control over is your risk. I bought a course from Axia. It was a waste. Not more content than in their YouTube stuff, really. That's interesting. Well, I kind of thought, like my impression has been, you know, it's basically what they have on their YouTube channel, but it's just thorough. So it's not like they're going to teach you some groundbreaking piece of information that nobody else knows and that you as a retail trader don't know and makes you successful. It's all the tiny little things that add up. You can't teach success. A teacher can teach you how to play, but not how to be successful. Yep. Yep. So it did not quite give me what I wanted for an entry. You know, like it's giving you this like, oh, we're gonna do a higher low. And they went up 2 ticks. And now they're coming back 1. Maybe their 8 weeks full-time course is good for a start. Yeah, that's probably true. I think one of the issues that you have is you have a lot of people that have been trading for a couple of years and generally know a lot of stuff. And you know, they probably already know a lot of the stuff that they're gonna teach you in Axia. And you have these people that have been trading for a long time, and they're just looking for like, what is the thing that I don't know? And the trading course isn't necessarily going to help you with that. Grady is incorrect in a lot of the things he says. He's mainly focused on market orders. No wonder he's so inconsistent in his webinars. Well, so I have a theory about this. And this is why I'm saying what I'm saying right now. It's the little things. So John Grady understands that order flow is important. He understands what order flow, you know, how it works, and he has a really good way of teaching it to people. And he's the only person really out there that I think has really put out the information for somebody to learn how market microstructure works. Although I believe there is a book that I really want to read about market microstructure too, right? But I think that alone is not enough. And I'm assuming that Grady is a successful trader. I've never seen his stats, but I'm assuming that he's a successful trader. I think it very well may be the case that the thing that separates him from me is tiny little things, and he's probably not even aware that those are actually the things that are making him successful. You know what I mean? So I watched one of his webinars, and one of the things that I noticed in his webinar, the one that I watched, was he got ran over like 4 times in a row. And he was like, well, you know, sometimes that happens to me. And I'm like, oh my gosh, he's just like all of the guys in Discord that when I'm going long and I think, oh man, this is like a trend day. And I see everybody else in the channel fading it. And he's one of them. that was my thinking. Right? But the thing that he did was he always was able to use the order flow and what he knew about the way that the market moved to reduce his risk. He took all of these trades. Well, there was all these places where on those days, because I had traded those same days, so I was able to go back and look at what trades I had made. And there were places where I took trades where he didn't, and he's like, well, there is a chance that, you know, we've come up to a high here. So maybe I think that it's going to go higher, but there's also a good chance that we're going to sit and hover around here for a really long time first. And so I don't want to buy this price. If I did want to buy, I would need to buy at the bottom of the range, and I would need to wait a little bit until that time risk is gone. And that's the difference. You see what I mean? And that's where it's like, it could be a super tiny thing. It's like, hey, maybe you shouldn't take a trade at 710. Because the chances are that the 10-year is going to be really slow and directionless until the E-mini opens, and so what's the point in taking a trade there, right? Little things. Little things. Mastering getting a read on liquidity is still something I need to do. Those of you who've grasped it completely, kudos to you. Assuming greedy is profitable. Well, so you have a good point. So here's the thing. First of all, I don't think he's ever posted stats, right? Which I think is kind of interesting. I would have thought that he would post stats and tell you, here's the win rate and the MFE and MAE that I tend to get, so that his students could, as they're trading, that are trying to trade the exact same way as him, kind of know, okay, I'm taking on a lot more risk than he is. I think that would be really useful information to know. Right? Now, the other side of that is, if all of his webinars were unprofitable, I would think that somebody at some point would realize it. Don't you think? But I have to say, just based on watching his webinar, you know, it's not like a ton of money. And I think his success, yeah, it was Peter. I don't care whether Grady is profitable. He was not trading well in the webinars I took. No, but I mean, can't you say that that the main thing that he's trying to teach is good and is a necessary thing for you to learn to be successful at scalping? Okay, what's going on here at 13? I have not found a teacher yet who has proven that he is profitable. Interesting. So who do you listen to? Well, I think what Smash the Bit is trying to say, though, is that you can't necessarily rely on any one teacher to get you to profitability. You're going to have to find your own edge, because the chances are that an edge that is popular enough to be out there in the market is unlikely on its own to make you successful, because that's the nature of the market. If you have an edge and you're being successful with it, then you're going to size up. You're going to continue to size up and size up and size up until you've sized up as much as that edge will allow. And hopefully you don't overdo it. Because maybe you overdo it and then everybody knows that there's that edge there, and then they, you know, and then it's gone. Yeah, I've never, you know, so I remember there was a webinar I took. I'm trying to remember who it was. I'm sure that when I tell you guys this story, you're all going to know who it is. But this guy is like, his big thing was like, other educators don't show you that they're profitable. And so he had stats, and he came across, he actually showed like the trades, individual trades, and it had the numbers, so you could actually go and prove that there was that, where you could look it up. But the problem with it is that all of his trading happened during the 2008 crisis. So it was like all of his trades were like shorting the E-mini futures during the craziest days. I was like, you know what? I made money during that time too in my simulated trading. It was like they were handing out money like candy back then. So almost anybody could be successful in that market, assuming you're short. It was all that time period between the crisis and the February when we hit the low. And it's like, look, guys, all you gotta do is sell during that time. You should be successful. It's just like on the other side, you look at somebody that's been trading the E-mini for the past year. All their trades are long. Well, okay, yeah, that's your edge. But as soon as the market turns around, it's not going to be that anymore, is it? Okay, so that was interesting. They stopped some people out there at 10.5, but it wasn't a ton. Now, smash this bid says I stumbled across some successful guys by pure luck. Okay. Well, I mean, we've had people come through the channel that have been successful, or they've had success from time to time, and they've shared stuff. They've shared stuff that I thought was useful. Vinny E-Mini, oh my gosh, Vip, were you around when we banned him from our channel? Yeah, he came in and stirred things up a little bit, and we had to ban him. I'm really interested to know, though, what is something that you think John Grady teaches that you think is wrong? I'm interested to know. The thing that I've had a hard time with is I see his signals all the time. But a lot of the ones that, I actually tested, it's like they're random. You know what I mean? It's like, yeah, he has entries, but there's more to it if he's a successful trader. I think he is, but he's probably not as successful as everybody thinks he is. But I think he's definitely had successful time periods of trading. I don't think that it's the signals that he puts in his book. I don't think that's what makes him successful. If he is actually successful. There seems to be so much, and that's also why he goes through and he's like, I can't actually teach you to be successful. I can only show you, like, this is what the game is. This is what's going on so that you can watch it and understand what's happening. And then it's up to you to actually come up with an actionable trading plan from it. I'm wondering what happened there. That was kind of weird. Kind of weird action. We came down really, really fast there. Oh yeah, for sure. He could go years teaching, telling everyone the context isn't right. I don't know. I mean, obviously he makes money from selling it. I don't know if it's that much money that he makes from doing it, but I mean, he's not getting filthy rich off of it or anything. And that's kind of been my whole thing, is that I'm like, if I ever become a successful trader, I really want it to be the case that the whole thing is there, and so you can watch and make your determination from that. Yeah. I think that the things he teaches has value, yes. And I would add that the things that he's teaching, you cannot find anywhere else. I have not found anywhere else where they talk about that. You know? Especially these games that they play with the icebergs where, you know, they pull and then there's an iceberg underneath of it or whatever the deal is, and kind of the internal mechanics of that. I mean, it's something that happens and you don't see anybody else talk about it. Even Jigsaw, I mean, they kind of, he talks about it, but the Jigsaw videos don't really teach you the DOM games, the way that works, you know, the from tick to tick, the, you know, the whole thing that like, oh, we're going to be in a 3-tick range, they're going to put a little bit up, and then they're going to put a little bit down, and it's only going to be like 500 both ways. How many of his students have you met that are profitable? I mean, that's a tough call because now you have to define profitable, right? I think almost everybody that I've seen come through our Discord channel, not that I'm keeping stats or anything, but I think that almost everybody I've seen that's come through Discord that's trading that style of trading has had a good run of some sort. Now, over the period of 5 years, are they profitable? I don't know. Yeah, Uzi says everything I've learned has been from experience. I wish there was more. I don't know how to put it. Like, and give you an example. We'll see a trade. Like one of the trades that people were pointing out to us a couple months ago was this thing where we're on an edge and there was a strong ticker. There was something that really makes it look like it's just going to continue through. You know, like let's just say, for instance, that the offer at 11.5 right now was really, really strong. And absolutely nobody sells 11. Right now, it doesn't surprise me that nobody's selling 11. They're going to be scared to sell 11, and it could happen all at once. But let's just say that the case was that they definitely should have sold 11 and then nobody does it, and then it reverses there, right? So people were saying, well, this is a really good signal and you can reverse off of it. And it was like, well, not exactly. Because, yeah, in a slow market, I've seen that. And it happens a lot. But if you actually start backtesting it and doing it every time, what you're going to find is that, you know, they could tick up and then they can tick back down and then that time they do it. And so it's almost kind of random. Yeah. The thing about trading, they do just enough to keep you going, of course. You're going to have good runs. That can happen by luck, but do you really know what you're doing? Yeah, I think that most traders give up before you would ever get to the point where you could actually say that they knew what they were doing or not. You know, because what I'm learning is that it's not unusual to have a really good strategy and just have a 6-month drawdown on it, you know. But it's something that would still make you a lot of money over 5 years. So the question I'm still trying to decide is, what is a reasonable drawdown? My goal is 16 ticks. I don't think that I should ever draw down more than 16 ticks. But yeah, I've had things that you get a 6-month drawdown, yeah. And it could just be that your strategy doesn't work in the summer. You know? Yeah. No, smash the bid's correct. That's not sustainable. You better have big savings. You shouldn't have 6 months worth of drawdown being a scalper. I agree. So what I was doing is I was taking the continuations, and I was doing really good when the market would run. And so at the beginning of the year, when the market was really moving, it did really well. And then around April, the market changed, and generally speaking, when you came up into liquidity, they tended to reverse that rather than going through. And so that's where my strategy started to fail. And that's when I had to go back and say, okay, maybe this is profitable over the long run. And I still think that if you traded that over 5 years, you would probably make more money than you lose. But it's too long of a drawdown. So I went back to the drawing board. And I think I'm still kind of on the drawing board, but my conclusion right now is that the thing that was hurting me the most was my approach to risk management. I wasn't doing enough to define where those edges, you know. Well, I say 6 months because like listening to some of the podcasts and stuff like that, I've a lot of people that claim to be successful traders have talked about having long drawdowns, or they have a bad year, for instance, right? Like you could have a successful strategy and still have a year that was unprofitable. Very possible. So does that more acceptable way of explaining it? I'm still a little weirded out by this move that we had down to 11. Like, it was really fast. And you don't really see anything to... If I didn't see it on my chart. Because even when it was happening, it didn't seem like a dramatic thing, but... Yeah, but an unprofitable year does not necessarily mean 12 negative months. No, but you could have had 6 months profitable and 6 months unprofitable, and the unprofitable months were just more. I only say what I say because my observation has been that the market goes through regimes. So there's a certain trade that is dominant or piece of news that is dominant, and they will change just all of a sudden. And so you could see during that market regime, when there is an iceberg or liquidity placed on the DOM, they tend to go through it. And then in the next regime, they will tend to not go through it. They'll tend to bounce off of it. And so you get a retail trader, and they'll say, oh, okay, so my observation is that there is an iceberg at 13, and they're not able to get through it. And so every time that I see an iceberg, I should join it. And so they do that, and they'll be successful for 6 months. If that's what you did, you would be overall profitable from the period of April till now. let's say April until the beginning of August, because in the beginning of August they stopped doing that. Okay, you would have been profitable during that time, and then you would have gotten to August and you would have gotten creamed, and you would be like, what the heck? And so now at that point you have to sit down and ask yourself, okay, so there's a drawdown to it for sure, but is it net profitable or unprofitable? Right? And you're probably never going to find out, because you're going to change your strategy because that's too big of a drawdown. Consistency in scalping is, you want to be profitable every month. Maybe, yeah, I think generally speaking, yes. Oh man, like here we are up at 13.5, and they don't necessarily want to bust out the top either. Well, we have news in 5 minutes, so I don't think that a trade here makes sense either. When you started a year ago, did you see yourself trading a one lot 1 year afterwards? Yes, actually. I thought that what was going to happen was I was going to get a couple months under my belt. Like when I really started, because it's almost been 2 years now. Actually, it's almost been 2 years. Okay. I started in October, like the end of October, 2 years ago. Okay. So I thought that I was going to trade for about 6 months to figure it out. And then after 3 to 6 months, I would start understanding what was going on and start doing better. And then be able to go live. And then I thought that I would be trading a one lot for a really long time, but that overall I would be slightly profitable, or at least enough to cover commissions and costs and everything. And yeah, so when you look back at it, it's kind of more like, okay, it took me a lot longer, I think, to really figure out what was going on, for starters. So it took me about a year, I think, to figure out, to start to feel comfortable. So then it was that December, I think, when I started to have some success. And then you can see, I had about 5 months of success. So December, January, February, March were all pretty good. So like 4 months. And then about midway through April is when I started to fall apart. So then I changed things, and I think most of you guys have been around here since about April. I think Uzi came in around May or something, and smashed the bid. Was it? Has been making me feel stupid for quite some time. Not making me feel stupid, but he definitely always comes in when I'm doing poorly. And okay, so was this live trading? So I traded from, I told myself that I wanted to have 3 months successful in sim. So I did that until February, and then I got things going, and I started trading it like the end of March. So I had like a month or so there where I was profitable, but then not only did the market change, but I don't think that I handled it very well. Like once it was gone, once the market changed and the edge wasn't working, I think that I just fell apart. And I honestly, I feel like I'm still struggling to get my feet back underneath of me from experiencing that, you know? So I'm, there's experiments, but I feel like I'm doing the same thing. I'm just, it's different places, it's different traits, but it's still all based off of the order flow and my interpretation of the order flow. Yeah. I don't. So the thing is that when I went to live, I really don't think that I traded it any differently when I was live. I mean, at that point, the simulator's pretty accurate. And I was just taking the trades based on habit. But it was like when it was not working was when it started to mess you up, right? Because if it's on sim, then I start to go, okay, well, it's fine. Whatever. But when it's on live and you start to get more of a drawdown, you question it a lot more, right? You start to become inconsistent. You start to make the mistakes and screw up and stuff. But I guess the thing is when it comes down to like strategy, it's I don't think it's any different. But like I said, little things, right? My strategy was way too much like, okay, we're waiting for some indication that somebody is buying and that they really want to push it. That's what I'm looking for. And they tick up and they have a really strong bid all of a sudden, and that means that they're ready to push it. Okay, so that's actually an okay signal, right? When the market wants to push, you will tend to see the bid or the offer solidify very quickly. Okay? But they also do that as a trick. They will come up here, we're right on the edge, 13. And so what do you see? Pretty strong bid at 12.5. And what's happening on the other side? Almost nothing offered, and yet they've had to buy 17.88. So they're holding a strong bid because some people want to go short there. Okay. So if you bought that location, what's your risk reward? Like, you have to go all the way down to 11 to the next pivot. So your risk to truly know that if the trade is there's a swing here and it's going to swing up to like the high of the day, you would have to go all the way down to the bottom of this swing, like the 11, to really truly know that you're wrong. Like, that's the chances of that particular thing happening. And that's where that strategy was flawed, I think. That, and I just even now still don't have a very good idea of like when it's really range bound, when it's going to stay like that for a long time. Okay, so they take 14. So now you come up to 14.5. 14.5, I might feel a little bit more comfortable taking a trade. I thought it's going to be close. – I still want to know though. I don't know. Smash the bid is still there, but I want to know one thing that you think that John Grady teaches that you think is wrong. Yeah, putting your stop under a swing low is not. You don't want to. Like you really don't want to buy it here and then have your stop order at 10.5. Right? If you're going to do that, it better be like you bought 11 and your stop order is at 10, and you know. That's why I'm thinking here, if we get to 14, I might short it. But it kind of depends on what the situation looks. Well, we just know there's 14 and then there's the high of the day. So, sorry, 14.5 and then there's the high of the day. So, if we want to reduce our price risk, we want to sell it somewhere around here. And then that way, if we're wrong, we're only risked 2 ticks. So they're having trouble at 13.5, but I'm not entirely convinced by what's going on right now. And we also do have to keep in mind that we could continue to just buy. Or we could continue to just range. I don't know. ZB's time profile opportunity is suggesting a possible trend day. It's too easy to point to context being wrong as the reason that the trade stopped you out. Yeah, no, totally. I mean, the reason that the trade stopped you out was because the buyers were more aggressive than the sellers, or vice versa. Where the liquidity was too strong on this side versus the other side, and blah 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 blah. You know, you can always point to what actually happened. The question is, how effective are you able to, one, predict what's going to happen at that price, and two, limit your exposure if you're wrong. Now, context is one of those things that you can do to limit your exposure. We can say, well, we know that the E-mini is coming out, so we don't want to take a trade here. You know, that's context for sure. Or we've had some good economic news. Things are really moving. So if things are really moving, then that's not really a very good context to take a fade trade, is it? Now here today, it's been really slow. It's been crazy. Like we have, okay, so now this was 4 ticks, right? 1, 2, 3, 4, and then 5, 6, 7. So we've had a 7-tick regular session so far. So to me, the context for a fade trade makes sense. Okay. I'm not sure if I'm going to fade 14 though. It's kind of like almost too obvious now. And they might just blow through it. But, you know, that's one of the sort of things that you can say, okay, that's the context. And then if you take the trade and it doesn't work out, it's kind of like, you know what, that's okay. John Grady is focused too much on market orders. That's my main issue with him. Okay. So this is something that I have a hard time with understanding, is I can see there are days, like if it's a trend day, you can just follow the market orders, right? Like they're going to be the ones that push it, and they're going to move it a certain way or whatever. And then you got to the other extreme where it's like a range bound day, and you will see what situations like yesterday. Remember yesterday when the 5 and the 10-year had just bought and bought and bought, but we were down like 4 or 5 ticks, and it wasn't until people started getting stopped out that you actually saw cumulative delta short. You know, how do you know that it's actually going to be the limit orders that are going to start dominating? Like I can't tell that. It's always a surprise to me when that happens. You've actually got a similar thing going on right now, don't you? We've come up 7 ticks. The cumulative delta is actually negative. This is why resting matters. If somebody is bid 14 and the offer is 15, it's bid 4,000 and the offer is 15, which side do you want to trade with? Well, that's where it depends. When I see that, the only thing that tells me is that it would be a lot easier to get filled on limit if I sell. That's the only way that I read that. Typically, when I see that, though, chances are they're going to buy. They're going to buy that 15 that are offered, and then they're going to bid, 500 or something. If this is the end, they're going to bid like 500, and then they might not do anything, and they might sell it down, and then they might offer 500 again. And it's just robots. So can you really say, if I want to get 3 ticks, which way it's going to go just based off of that? No. It just tells me if I really, really want to buy or sell here, how do I have to do it? Well, if I really want to sell, the best thing would be to just sell on the offer and get filled. Why would you want to sell when there's nobody else willing to sell? They're probably going to clear out the offer and maybe look higher. Well, no, it just means, I don't think that's what that means. Because at that point, if they buy the 15 that are offered there, and then they bid 500, now it looks like exactly the same thing but the other direction now. So now you're going to say, well, why would you want to buy when there's only a few willing to buy there? They might sell it and push it down and sell it lower. See, that thing that you're explaining to me, all that says is, for the moment, it's probably balanced at that price. Probably balance at the price. But so what was I was saying, if you wanted to sell, it would probably be better to sit on to join those 15 and get filled that way. If you want to sell, or sorry, if you want to buy, the chances of you getting filled at that 4,000 is a lot lower at that point, right? And if you do buy and you do get filled, at that point it might not be a good thing, because that just says, oh, there's actually a lot more market orders there than there were limit orders at that particular price. And granted, it's only one price, but that's not something in your favor if they sweep you and then they immediately offer 2,000 at your price. You don't want that to happen either. And if it's really a buy, that's not going to happen. So if it's really a buy, then you're probably your best option at that point. You may have already missed the low risk trade, and maybe your best choice is to take it as she goes, basically, right? You're trying to catch the edge and hoping that on the tick up that they bid 2,000 to 3,000 and then never looks back. But that's the whole thing is like, a lot of this is just random, guys. A lot of this really is just like somebody with a lot of money is sitting there and is bored and is like, I think I'm gonna sell it. You can't predict it every time. It's just too difficult and complicated to know what every market participant is gonna try and do. So you could have a trade that's totally good and it just doesn't work that time and it's just random. Well, so I need to reset this. The 5-year still has a pretty good bid underneath of it. I think when we were back at 10 half 11 was a much better trade than I gave it credit for. Sure was volatile back there though, wasn't it? This right here is like the only thing that I see that really seems odd or out of place. That and we did buy up, but we haven't gone above this. But that could be people closing out positions. I don't know. It's just a really slow Friday. I don't know if a trade today really makes sense. I don't know, I'm thinking about this a little bit more with it. Like, the thing is where the resting matters, and I think that what Smashed a Bit is trying to say is that, like, John Grady says, okay, market orders are selling, we should sell too. And what you don't see is that the liquidity actually ends up being stronger here and pushes against all of those market orders all the way up here. Now, I'm not very good at seeing that when that is going to happen, but I think he's right that Grady doesn't even necessarily point that out. And because he's only looking at the DOM and the numbers that are on the DOM, it can actually be hard to notice that that's actually what happened. Like when we had this move up, if I didn't have this chart to tell me, I probably would have said, hey, you know what, there was a lot of buying through there. There was a lot of market buying through there. But when you look at the move, you actually realize, actually, that's not what happened. There was a decent amount of volume down here, you can see. Okay, Smash the Bid says yes, I'm understanding him correctly. Okay. See right here, there's a lot of volume down here. But the cumulative delta is down. I would not have noticed that on my own. And I don't think I think a lot of people miss that. But that's my problem, is like, when is that going to happen? I've never see it. And it's so much harder to see too, you know? Like when a market order goes through, you can see it. Yes. There was 22 that went through there to buy it up. And that was all it took. Okay? You can see that really easy. But that they sold it and then they bid 2,000 and then they sold it again and they bid 2,000. Like, that's, you don't see that all at once, and it maybe it resets, and you know, you're seeing all these market orders and which one is going to win or lose. It's hard to see. You can definitely get a feel for it, but it's not as obvious. Okay. So now that they've touched 14.5, I am seeing this offer at 15 firm up. So I'm anticipating that the bid is going to try and push through here, and they will have a hard time getting through 15 and coming back for at least 2 ticks, if not more. Kind of depends. The E-mini looks a little bit weak, although the E-mini is mostly going sideways too. But I think, yes, I think this is the trade that I've been waiting for. And we only have to risk 2 or 3 to the high of the day. And if they go through me and they put up a strong bid and they immediately start hitting that 15, then maybe I try scratching it. Okay, so I anticipated that right. I thought that there would be a lot of liquidity there to stop it, and there was. There was a big old iceberg, 6K there now. And this is firming up a little bit. It's not a ton, but it's, you know, it was 6,000 and now it's almost 650. Okay, so they ticked up quite a bit, pulled. Well, 67's not necessarily a big deal. What are these other ones doing? Well, that one's at the high of the day. Okay. I think that what just happened there in the 5-year is a bad sign. Yep. Okay, well, the 5 years not quite going for it. I think that the 5 years should tick back down. Okay, so they're still absorbing on the offer there. That was very interesting. That was actually a lure. And they pulled and then ton. Okay, so now they're pushing the 5 year down. There's more to it than stacking and pulling. Well, yeah, I think the thing that makes it hard to see is that like a bunch is going to trade there, and then maybe they trade the other way, and then they come back up, and you're not going to remember that they traded 2,000 this time and 3,000 this time, and you know. I don't know, guys. Is this going to break out on me? I like what the 5 year is doing here. And I like that there's so much, you know, so many icebergs absorbing the buyers. But, I mean, that's a lot of buying. That's way more than I would have thought we would be seeing at this point. I really thought that you would see like 6 and then there'd barely be anybody willing to buy 15 and we'd come back down. But because the 5 year has come back the way that it has, I think I should keep this. Okay. A little flip in the DOM and the 5 year tick down again. I'm not offering a ton, but okay, the 30 year is still not okay. It's good. So I think I should move this to +3. Because it's going to be tough to get filled at 13. Especially since there's already 6,000 sitting on it. Okay. So I think that everything that's happened up until now is good. But the next thing that I need to start seeing is another flip of some sort, or people hitting into this 14. Okay, so it's stacked to 2,000 there briefly, kind of interesting. Let's see this slip in the 30 year. Okay. And they tried to buy it up and they couldn't. Now they're holding it. And now they sell it and they couldn't. Can you tell me what was the last half an hour on the volume traded? Whereas the price stopped the last half hour, where was more and where was less traded and how fast? In the last 30 minutes, so let's see here, what was at 8 o'clock? We were, oh man, okay. It's actually been that long, that's funny. Okay, well, so that was it. That was like right here. So I would say that the most has probably been traded around, I mean, it's been a super, I mean, we've only been in this past 30 minutes. It's been 1, 2, 3, 4. These 4 ticks. I would say more is definitely traded down here, right? Well, I mean, you can see it on the volume profile, but more is traded at 14.5 probably than these other trades, maybe 14 too. Where is the price stopped? Well, so it first time it came up, right? Came up to 14.5 and it didn't do anything. And it came back down and then it came up to here. So that first time it kind of looked like it wasn't finished to me. Now it looks more like they could not be not finished, or they're going to try and stop it from getting to the high of the day. And how fast I think that it's been slow through all of this. If you do not look at that and concentrate only on limit and market orders, and the delta will be part of the sacrifice in the long run. Well, I think I kind of understand what you're saying is that it's not just the overall delta or the limit and market orders, but it's also the prices themselves. That there was a lot traded at this one and not a lot traded at this one, and when we traded at this one, we weren't there for very long, and that sort of a thing, right? Because you could have a situation where a lot traded here, but it happened very slowly, versus a lot traded here, but it happened like in a split second, and at that specific price, and it's different from the other prices, and it matters, yeah. See, right now, it seems to me that this 14.5 is more the balanced price, because that offer here is pretty weak. It's not super weak, but I mean, it's the weaker of the two, and they're having a hard time getting a lot of people to go into it. I mean, if I wanted to sell 15, I'd be feeling a little frustrated right now. And this could very easily flip and trade back down and then trade back up. So this seems like the balanced price. Yeah, and see, they hit it. There's a lot more went through very quickly. And it's the same here in the 30-year. It's just that the 30-year doesn't want to break below 145 yet. You're also kind of starting to get an odd situation because these bids in the 5-year look really strong, right? Well, not really strong, but I mean, they're much stronger than the offers. These are all 31s and these are all 25s. So there's a big imbalance in the book in the 5-year. And all these have bought, but then that's not what's happening these last few ticks. They're ticking down. And the offer in the 10-year has actually been higher. The cumulative delta in the 30-year has actually been down. If we can convince some people to sell evens, this is a problem. Okay. 247 to do it, and then they offered 334. I think that's good. And the 5-year broke a little lower now this time. We just, if it comes down here, we got to keep in mind this 13 is a pivot, essentially. Like, it's going to be hard to get filled at 13. We might have to get out at 13.5. I mean, it looks like it's making a good little up move here. And there's some support coming up behind it too. Okay. Well, that 30-year still wants to hold evens. Oh, so are you trying to say that all of those things that I told you, I wasn't able to actually see them as they were happening? I'm only really able to tell you that because I can look at the Vista chart and say, well, here it did this and here it did that. So I don't like that the 30-year that the offer is weak now here. Okay. That offer pulled away way too easily. Okay. Okay, I think that's our signal that this isn't working out. Okay, iceberg. Okay. So the offer is really starting to put some pressure on. But somebody's absorbing it 14.5. Well, we still got this evens in the 30-year. This one's putting the pressure on, but these two are not. A lot's trading here at 15 now, though. Not as much as is traded at 14.5, but I think that's the second big iceberg we've seen there. It's going back and forth here to 1 a lot. Well, that was a pretty good uptick. Interesting. Well, at the moment, the action doesn't look correct. Yeah. Well, we've come up here. Z mini has kind of come back a little bit. If everything goes the way that I was thinking, then the E mini should catch support right about where it is. Okay, down tick, not a super strong offer though. I mean, that's a little better. There's still this problem in the 30-year that with evens isn't there. Your dog's acting like it's dying. Because mommy hasn't woken up and gotten them out yet. Okay. Well, that was where the E-mini should have picked up support, and it did not. Nope. It's not doing what I wanted it to. I think I have to say no. Probably got out right when it's about to go down. I'm a little concerned about what the E-mini's doing here. Hey, that looks a lot better. Should have kept it. Oh well. You know, if it comes back up here again, that should hold so I can put another order back in. Let's see. It's that freaking evens in the 30 year, man. Not giving up. I don't know. Even if I hadn't have sold that, I would seriously be considering just taking that one tick at this point. I mean, this is pretty much the time. See, that's just not... No chance that it's going to fill there, and if it does, it's probably going to go right through it. You're trading back and forth in that 14 okay, though. There's still this price in the 30 year that's uncooperative. Hey, an unexpected lucky downtick. I just want to put this here to see if it would fill. think it's going to. Okay. Oops. Gosh dang. So it would have filled, it would have gone much through it. I didn't actually expect it to flood all the way through there. So if I had taken that, if I had held that short, it would have gone 2 ticks beyond what I should have. So let's pull this up. And that one. So that one wasn't really meant to be a trade, right? This one, though. He was correct. Got scared out. Was worth 5. Right? 14.5 to 12.5 to 12. Yes. I don't know. Yes. Well, that really sucks, guys. That was like a really great trade, and I was like, well, I'm gonna have to watch that again and see if there was something that I was missing at that time, because to me, it was like, it's right at my price, and they're only putting up 500. That's just, you know, that's a good opportunity to get out and just see, and then you can wait and see if it looks better and get back in. And it never did that, really, did it? It just, like, after I got out, it went straight down immediately. It's like they're fucking waiting for me to get out, and then they go, okay, now that Seth is out, we can do it. I don't know, what do you think? When things like that happen, I start to feel like I'm crazy, because it always seems like they're waiting for me to screw up and then they do the thing. You know? There's always something different too. It's not like, oh, okay, anytime that the offer is not so strong when I think it should be, and I get out, and then that ends up being the wrong signal or something. No, it's always something different. And it just makes me feel like they're just waiting for me. You know? Like he's watching and he's, okay, how are we gonna screw him over? Now he's out, so the way to screw him over would be to have it go exactly where you thought it was going to go. Right? Every fucking time. It makes me feel like a crazy person. Because I know that that makes zero sense. Nobody would sit and watch that and stop somebody that's on sim. And it probably doesn't actually happen every time. It's just I'm only noticing it when it does happen, right? Still. Makes me feel crazy. The thing I don't understand, though, is why did it go so far? You know, it could have come... Here was it 14.5, right? Oh, sorry, 15. Okay. And here was 13. So it could have gone to 13 and then reversed back up. But it didn't. It just went... And then the other thing was the thing that was funny was the 13. I put that in there because they thought, okay, that's where I would have to get out at, right? It's going to be hard to get filled there. It was not hard to get filled there. Oh, man. Okay, well, let's post a bit of coin charts. It's time to go. Okay, well now it's dead. So I think that, you know, it is kind of the timing for it. There often something happens between 8:45 and 8:15, and that was it. I don't know. Mm-hmm. Oh, Lucas says that he was also short and closed at a one-tick profit. I don't know. Like, this is why I hate the summer, because if it's like a normal action, or like there's a reason for people to trade, then they're going to trade the whole time, and you can kind of see when, you know, as the market turns, or as, you know, people are getting shoved, or whatever the deal is. Okay, in the slow summer action, we know, okay, we got up there, we can see them stacking. You can see it really good in the Vista chart this time, right? You can see it stacking as it gets up there. Okay. You can see that the offers are building up here really consistently. You can see that the 5-year has gone up too quickly and it needs to go. So the whole setup that I had there for 14.5 was totally right. I saw it was going back and forth and concluded they might go for highs again, so I closed out one tick just before it started to fall. Ah, I gotcha. Yeah, so the whole setup was totally right, and I just said, it's taking too long. They don't appear to be going for it right now, and I happened to close it, and it just so happens that at that moment, whoever it was that was going to make the thing sell decided to sell at that time. I highly doubt that he's watching this podcast, but he's out there somewhere. And he just, at that point, decided that he was going to screw everybody over. And he took it. And because it's just like one person, it can happen at any moment. It's like totally random, you know? So how do you manage a trade in that kind of a situation? Like, a lot of the time you're going to screw it up, I think. And it looks like both of us kind of did. And then I actually ended up taking a -2 when I was doing the test. So that was the thing that was funny, was I thought, okay, well, let's just put it in here. I thought this is what I thought was going to happen. I was going to go in. It was going to be hard to get a fill. Then I was going to get it. And then maybe I could do that and get out at one tick. That's what I thought was going to happen. But they just went. They just went. So I wonder what was the E-mini doing when that happened. Oh, the E-mini actually had a bit of a head fake. Yes, sir. That's what happened for sure. Oh, man. You see that in the E-mini? Head fake. Right there. That orange candle was what screwed us up. Well, it's just kind of funny, right? Like, if I wanted to make a video to show situations where retail traders get screwed up, and I'm not necessarily sure if it's something that we're doing, or if it's just that the market does that sometimes and it's not very advantageous for us. But that would be like the quintessential clip right there, is like, oh, I didn't like it, I'm gonna get rid of it, and then it immediately goes. Freaking just, it's just so classic. And yes, I agreed. I started to think at that point that they could go for highs, and so I got out. Yeah. Okay, well, it's time for me to go. I will catch you guys on Monday for another episode of Crappy Summer Action. We've got another, well, let's look at the docket before we go here. Now, I will explain to you how I do this, or what I noticed last time around was, okay, so you got, then next week you do have some numbers. You have core retail sales in the US, existing home sales, pretty good day of news on Thursday. So we'll have maybe 2 days next week that we could have something happen. And then the week after that looks really slow. Oh, preliminary GDP. That's important. Okay. But this is kind of the slower period of the month for the news, right? So probably next 2 weeks is, there's days with news that could have some good opportunities, which is going to be slow. And then you still kind of have like nothing. Okay, Bank of Canada rate statement. Okay, but then you get non-farm employment change. So we could continue to see this action until September 7th. And then the week after that, then I think we could go back into normal action. And by that point, things might be crazy. So we'll see. I mean, if there's going to be like a crash, it tends to happen in August through October, so we'll see. I don't see, I mean, we're kind of at a resistance area, so kind of hard to say when we sold. Well, we sold in like the end of July. We sold too quickly. And now we've come back to it. We haven't gone through it, but we could totally go higher. Okay, I'm yapping again. I will catch you guys.